Getting served with a lawsuit is one of those business experiences that makes abstract questions very practical very quickly. Does my insurance cover this? Who controls the defense? What if the insurer wants to settle and I don't? What if the claim is bigger than my limits? In this video, what actually happens when a business is sued and how commercial insurance interacts with that process. So you're not learning any of this for the first time when it's already happening. I'm Brian Woods with Integrity Insurance and Risk Management. We work with business owners, commercial real estate investors, and independent producers who are serious about protecting what they've built. On this channel, we break down insurance and risk management in plain language. No jargon, no fluff, just the stuff that actually matters when something goes wrong. Whether it's a demand letter from a plaintiff's attorney or an actual lawsuit filing, the moment you receive it, you contact your insurer or your broker immediately. Most commercial liability policies require prompt notification of any claim or potential claim. Failing to notify promptly gives the insurer grounds to dispute coverage. When in doubt, report early. Reporting something that doesn't develop into a claim costs nothing. Failing to report something that does develop into a claim can cost everything. Here's something a lot of business owners don't fully appreciate. Under most commercial liability policies, the insurer has what's called a duty to defend. That means they are legally required to provide a defense, pay for attorneys and the full cost of litigation, even for claims that are ultimately found to be completely without merit. This is genuinely significant. Defense costs in commercial litigations reach six figures quickly. The insurer absorbs that cost as long as the allegations could potentially fall within the policy's coverage. You don't pay for the defense, they do. The duty to defend is broader than the duty to pay a judgment. The insurer defends the case while the outcome is still uncertain. Real quick, if you're finding this useful, subscribe to the channel. We put out new content every week on commercial insurance, risk management, real estate protection, and business liability, all in plain language. It's free and it'll save you from learning these lessons the hard way. Here's where it gets more nuanced. In most standard liability policies, the insurer has the right to control the defense. They select attorneys from their approved panel. They direct the litigation strategy. They make the settlement decisions. Most policies include a consent to settle clause. The insurer typically cannot settle a claim without your consent. But there's a related provision called the hammer clause. If you refuse a settlement offer within the policy limits and the case results in a judgment above that refused offer, you may be responsible for the excess. The insurer fulfilled its obligation by offering to settle within the limits, and the additional exposure above that belongs to you. Understanding this dynamic before you're in it is useful. Most of the time, the insurer's interests and your interests are aligned, but they're not identical, and knowing where the pressure points are helps you navigate clearly. If the insurer isn't certain the policy covers this specific claim, they may send you what's called a Reservation of Rights letter. This means we will provide a defense, but we reserve the right to deny coverage for any judgment depending on how the facts develop. A Reservation of Rights letter is not a denial, but it is a signal that coverage for this claim is contested. When you receive one, getting your own attorney to review it, separate from the defense counsel the insurer assigns, is a reasonable step. The scenario every business owner should think through before it happens. What if the judgment or settlement demand exceeds your policy limits? The amount above your limits is your responsibility. No insurer obligation, no further coverage. This is the gap that excess and umbrella coverage is designed to address, and why the limits you carry should be based on a realistic assessment of your actual exposure, not what seemed adequate years ago. If this was helpful, share it with a business owner or investor who needs to hear it. And subscribe if you haven't already. New content every week. If a potential lawsuit is already on your radar, or you simply want to make sure your liability program could actually handle a serious claim, reach out to Integrity Insurance and Risk Management. The link is in the description. I'm Brian Woods with Integrity Insurance and Risk Management. We'll see you in the next one.